market came also to this big hidden SND, okay, to nearly its 50% and give a bigger reaction, where we are coming to this zone here. So from PD array, from points of interest to points of interest, it's a logical sequence. And a chronological one after one, after the other. So here was a beautiful trade also. So we have this big zone. Okay, this is the first tap of the zone. After we broke this high, markets came back to make the first tap. All this is the first tap, and then markets goes higher. He didn't find any resistance until this week, this hidden SND, because this imbalance was already mitigated. So this is the first tap into the imbalance. It was mitigated back to its zone. First tap, go to another point of interest to find the resistance, which is this hidden SND, flip, and go back where to our zone, sweeping this first tap and flipping and going higher. So a lot of people, lots of traders ask about flipping, about the flip. So here I will talk about it. So the flip, the small flip, or the candlestick structure that I when I marked this in my charts to talk about the flip is this. So here, all this sequence was logic for me that the market will go higher. So I'm just trying to refine my trade to a good refinement, to find a good trade that suits me. And I'm searching as way to enter and to stop my to put my stop loss, the flip. So the flip is the last thing to search for. After all this, after finding support in a zone, liquidating the first tap, and flipping. So the flip is here, okay? So we have this candle. This candle took this low of the previous candle, okay? So this candle took the low of this candle, okay? Till now we are good, but we didn't took its high, so we continue down. Anyway, this is just for explaining, but we shouldn't search for the flip in those candles because we didn't took any liquidity, or we didn't took the first flip yet, okay? It's better to wait for the first flip to be taken than to search for the flip, okay? But anyway, here just to explain. Supposingly that this is the first step. Just we suppose, okay? So this candle, we took the liquidity. This candle took the low of the previous one, but we didn't took its high, okay? So we continue. This candle took the low of the previous candle, but we didn't took its high, okay? Until we came to this candle that took the low of this candle, and yes, also took the first tap, and this candle, its high was taken. I don't care if it is with a body close or not a body close, it is taken. Even with a wick, I consider it as a flip, Okay. Another thing here is that it depends on which time frame I am. So when my time frame is relatively uh, uh, the same, okay, so this is a zone that took a lot of time frame to to be built, okay. So here the simple flip will not work for me, okay. But when I have a zone that's with my flip, it's like the same time frame, I will consider this simple flip as my flip, okay. And here what happened, and something else is, when I see my flip, always I'm waiting to see what will happen if there is any hurdles or uh, any points of interest that might counter my trade or my direction. So I'm wanting to go higher. I'm analyzing here after I took my flip or after I enter, if there is nothing here in my way that may give some reaction and might eventually go take this low. Okay. So here I see this is a good flip for me from this low to this high. Okay. Uh, Here we have an imbalance. This reaction from this imbalance could easily give a reaction and lets the market go to this origin of the move. Yeah, it's good. Why not? So either you took the first flip and with its risk and you be content with the outcome. If it goes up, it's good. If not, you didn't miss a good trade. If not, you wait and you were stopped out. You wait a second entry and you enter. Okay. So here what happened? We had this reaction from this imbalance. We came back to the range here and we flipped. We had a new flip, a second flip. So here in this range, this second flip confirms for me that we will go higher. We will not go to take this low. Okay. And the second flip will be for me, I'm talking personally, a good entry and lots of executions that I shared in my uh, Twitter page, videos executions were with this second flip here after we mitigated this first hurdle. Okay. So after we get back to this range, or we can, yeah, if you want, from here, from this last high to this low, we broke this high, we get back to the range. Okay. So here it's like a structural flip in this time frame because this zone is in another bigger time frame. So here we had our first structural flip and then came our candlestick structure, candlestick flip. So this is candle. We have this candle that took the low of the previous candle, and we had this candle that took the high of this candle that took the low. Okay. Here we measure this range from this low to this high, entry in 50%. I will zoom so that will be clear one time, and no no one after that will have to ask about this flip. Okay, so so what we said, this be like this. Okay, so structural flip, my entry here. This candle took this low and we took its high. As simple as that. So high, low, high, and we broke here. So here it will be clear. Back to the range and go. This is the flip. Okay. And with the CSS, I don't wait for a body close. It's just we took this high. For me, it was enough. So this is a possible entry from the middle point of this range, from this low to this high. This is the middle point. My stop loss a little bit, 1 or 2 ticks below this candle, this low. And I target whatever I target. Normally, yeah, this is our ultimate target. Yeah, it gives a beautiful trade. This is our ultimate target. Yeah. Okay. Or here is a trade also from the range of this structural count of this structural flip. Okay. Either 1 to 1 of the zone or targeting the high that delivered the entry to you. Okay. Here we are talking about the refinements, what we can have as maximum refinement to an entry. Uh, in reality, these entries like this are not easy to take and needs to a lot of backtest, but it's good to know so that you see it and you see it and you can benefit from those entries, because yeah, this is how this happens. Okay. Yeah, so that was the first sequence. We broke this high, back to put the first tap, first scalp. It's a good scalp. Okay, back to liquidate the first tap, because here we have a, a difference, a significant difference with the time frames. So it's better to wait for a structural flip, which was this one. Okay, and inside this structural flip, I wait for my last flip or my second flip to enter and to take me with it. So after that, market just continue to go higher. So this is the flip. Okay. So this flip here, or this candlestick structure in 1 minute, it's just a translation of a structural flip in lower time frame, generally in 5 seconds or in 15 seconds. We'll